The 2023 year Bank of Canada announcement. Well, hey everyone, it's Joe Bladek for another episode of Canadian Mortgage Weekly at a special time today for this Bank of Canada interest rate announcement. Do you guys think that rates will go up today, or do you think the Bank of Canada is done and is going to take a pause? Let me know in the comments below. I'll love to hear what your thoughts are. I also have a video prediction that I put out last week. Let me know if you watched it. I would love to hear if you guys think that will come true or not. Looking forward to just being with you guys today. We have a great show planned for you. I'm going to be chatting about the interest rate announcement today, as well as some of the items that have been leading up to today's announcement, news, growing rhetoric, what my clients have been saying, and what my colleagues and professionals in this industry have been saying as to what's going to happen in the market today. So join me here. This is episode 119 for Canadian Mortgage Weekly at a special time, 9:45 a.m. on January 25th. So really excited to bring to you today's news and rate announcement. So as we get into today's rate announcement, we're going to take a look just before the announcement comes out, because we have about 13 minutes before the announcement does come out. We do have some news to go over. All right. So what's the news that has been leading up to today? Well, what have we heard out there? What have my clients been calling me about? What have they been saying that everyone is thinking what's going to happen with the rates? Well, 25 basis points is the growing consensus that rates will go up 25 basis points, because we have had some supersized rate hikes throughout 2022. Some rate hikes were a full percentage point, which this is my 13th year being a mortgage broker. I have not seen a full percentage point rate hike in my career at all. So we had a supersized rate hike in July. We had some 0.50 rate hikes. We've had some 0.250 rate hikes. Today, we're expecting a 25 basis point rate hike. Do you guys think I'm right? Do you guys think everyone else is right? If we do have a rate hike today, this will be the 8th consecutive rate hike in Canada, which is quite literally big and a very, very notable moment here, because we've never really seen this. Probably it has a lot to do with COVID and the supply disruptions and how much the rates went down and inflation. Now, also the news is saying, from what I've been hearing, is should the Bank of Canada even consider raising rates today, because we've already had 7 consecutive rate hikes up to this moment. What do you guys think? Do you guys think the Bank of Canada should pause at this moment? I mean, we'll take a look at inflation numbers in a second here, but it's a growing concern. We have a lot of clients right now that have been deeply affected by these increasing rates. Let's take a look at what the bond yield's up to, because the bond yield in Canada actually is a precursor of what happens in the fixed rate market, whereas the rate announcements to the Bank of Canada directly affect the variable rate. So very different mortgages, but let's take a look at what the bond market's been doing, and that has actually been steadily decreasing since October of 2022. And what have I seen on my end? Well, I've seen actually fixed rates dropping slowly and steadily since October 2022. What does that mean? I've seen my clients take mortgages for a 5-year fixed in October, and now the interest rates are a little lower. Should they have locked in October, or should they have waited until January? I'm not sure. They could have saved a little bit of money, but here we are. Also, the bond yield is lower than at our last rate announcement meeting, which was in December of 2022. And in that month, we saw a 25 basis point increase. What about the CDOR rate in Canada? What has that been saying and predicting? I use the CDOR metric simply to measure the viability of variable being a competitive option. And right now, with the CDOR rate being at 5.07, it has been flatlining quite considerably in the last 1.5 months. Right now, we have a variance to prime of 1.38. And with that variance being less than 2%, I can confidently say that variable right now is not the most competitive option. Maybe a fixed rate would be better. However, it's always important to talk to your mortgage professional. If you don't have a mortgage professional, please do call me. I have an appointment booking link in the video description below, where I would love to go over your mortgage plans and give you exactly my advice and what I think would be best for you, because in certain cases, variable is the better option still. For example, myself, all my mortgages right now that I've been renewing have been into a variable rate mortgage. You guys all might be thinking I'm crazy, but I'll explain to you in just a few minutes why I've been taking variable all the way through. What have the articles been saying today leading up to this announcement today? We have our announcement coming out in 7 more minutes. So hang tight, 7 more minutes. We'll have an announcement for you here with the Bank of Canada. But what have the articles been saying? Let's talk about inflation a little bit here. Inflation actually still very high. We had inflation peak in July. Inflation, if you don't know, is the rate in which prices are rising. So the rate in which prices were rising did peak in the summer of 2022. Prices are still rising, in fact. That has not stopped. But in the rate that they have been rising has been slowing down slightly from the peak of 8.1%. Currently, we're looking at 6.3%. So the Bank of Canada has been making a little bit of headway with slowing down the inflation, but it's still incredible. An inflation rate of over 6% is just ridiculous. Our money is becoming worth less and less every day. And with that, the Bank of Canada has been raising the interest rates to combat that. Fixed rates, I can't believe it right now. Fixed rates are now lower than variable rates, and they've been going lower still. Not sure how long this will last, but if I take 2 identical clients with perfect credit scores and great income and no debt, the client that wants a variable rate will end up with a higher rate than the client looking for a 5-year fixed mortgage. That tells me that the market is pricing in lower mortgage rates while the Bank of Canada is trying to tighten the market. And because the fixed rate market follows the bond yield quite closely, and the bond yield has been dropping since October of 2022 without a change in that trend, I think that we might see that trend continue into the spring market of 2023. What do you guys think? A lot of articles are also saying that even though fixed rate is lower than variable rate, this could mean that the Bank of Canada could have its last opportunity to raise rates today. And if that's the case, how much will they raise rates? Will they raise rates 25 basis points, which is 0.25%? Will they raise rates 50 basis points, which is 0.50%? Or will we see another supersized rate hike like we did in the summer of 100 basis points, which is a full percentage point? Again, I've been doing this this is going on my 13th year. I've never seen a 1% rate hike in my career. Okay, what have my clients been saying to me? Well, it's funny. I have a group of clients that in last year, when the prices were high, Joe, we are waiting for prices to come down. As soon as prices come down 10, 20%, we're jumping in the market. We're going to jump in the market because that's where we see prices going down to. Well, prices have dropped 23%. Those same clients now are not getting in the market. They're still waiting. They're now waiting for interest rates to come down. Well, I think if interest rates come down, the house prices will go back up. And if house prices go back up, I think these folks will still remain on the sidelines. The good thing about buying a house right now that I'm seeing, though, is that you're getting a smaller loan amount and your mortgage rate is not forever. You can take a mortgage rate today for a year. Maybe house prices will go back up next year, and you will buy at the lower house price threshold and be able to lock in a rate next year that could be lower. You just need to get through however many months that the rates are high for and that the term that you take the mortgage for is locked in to be able to eat that extra interest until we can get a lower rate. However, my clients don't think that. A lot of my clients do think that rates could remain high for the foreseeable future. Many are actually locking in not for a 5-year term, but for a 2 or 3-year term, thinking that rates will come back down in 2 to 3 years. So let's take a look at what happened with the rate increases and rate announcements last time. We had an increase in December. That was our last increase, 25 basis points. We saw the biggest increase in July with 100 basis points. And the last time we saw a rate decrease was March of 2020, and that was the start of COVID. All right. We have about 1 minute remaining until the rate announcement comes out. I am on the Bank of Canada's portal here. We're about to hear the rate announcement, so just stay tuned for that. What have other websites been saying? Well, other websites have been saying that the Bank of Canada, if they raise rates today, they will leave the door open for future rate hikes in case inflation does continue to soar in 2023. Some websites and news outlets are reporting that mortgage rates will actually peak in 2023. So that's a great point if you do have a variable rate right now, such as myself. If they peak this year and start going back down and you have a variable rate, taking advantage of those savings will be quite good. All right, and average Canadian home prices have actually stabilized since August of 2022. We've seen small increases and decreases across the nation nationally, but they're about 1 or 2% either way. So not very much to talk about. And Mortgage Dashboard today is reporting a rate hike chance of 69% today. So let's take a look at the Bank of Canada's rate announcement. We have it right here, right now on Canadian Mortgage Weekly. We have, are you ready for this? Drum roll, please. The Bank of Canada does increase rates today and increases rates by the lowest amount that we've seen, which is 25 basis points. A 25 basis point increase has been decided here today, everyone, by the Bank of Canada. They have also included some commentary as to why rates have gone up. One of those is that global inflation remains high and broad-based. They did make a comment that inflation is coming down in many countries and that it's largely reflected by energy prices. However, there is also uncertainty that the Bank of Canada is talking about the Russia's war on Ukraine, China and COVID-19, and the Canadian economy and the global economy. All right. Looks like Canada's growth has been stronger than expected. And they did make a comment that inflation has declined from 8.1 to 6.3. Again, that's not to confuse that inflation is over and gone. It's just at a lower rate than it was before. That could mean that inflation is still going bonkers in your city in Canada, and you're still seeing prices go up. It's just at a lower rate of speed. I guess that's a good thing right now. That's why they've only increased rates 25 basis points. So quite interesting to see that today, that rates have gone up 25 basis points. What do you guys think about this? Do you think rates will continue to go up in Canada at the next rate announcement? The next rate announcement, just so you guys have that here, will occur on Wednesday, March 8th. So we have just over a month to go over this rate announcement right now. Enjoy this 25 basis point rate hike. For those of you in a variable rate mortgage, I would love to hear in the comments below, why are you staying variable? Myself, the reason why I am keeping my mortgages variable is because I agree with some of the experts out there that A, rates will peak in 2023. B, that we'll see rates soften once inflation gets under control in late 2023. Because of that, if I was to lock in today and rates did come down next year, I would then be stuck paying the higher rate for the full 5 years. And to get out of that higher rate, I would need to pay a mortgage penalty. And that mortgage penalty to get into the lower rate, to me, will be much higher than the small regular increases that I've seen on my mortgage payments of $100 or $200 here or there, because I've seen mortgage penalties upwards of $5,000, $6,000, $10,000, $15,000. Do a few $100s a month add up to $15,000? I don't think so. Not for me. Myself, I'm thinking that once inflation and Bank of Canada does soften its policy on rate hikes, we'll see rates stabilize. And I've even heard from other industry professionals, some CEOs and leaders of mortgage companies in Canada, that we might see even rates drop into 2024. This could mean that rates stabilize. We won't see rates come back down to 1 or 2%. So if any of you have locked in at 1 or 2%, you're in a very good spot compared to where I think things will end up next year. I think we may see rates come back down to 3.5% to 4%. However, right now they've gone up 25 basis points as of today. Bank of Canada does increase rates by 25 basis points. So what does that mean if you have a variable rate mortgage? Well, if you have a mortgage in which your mortgage rate is variable, there's two different ways banks do that. The most popular way is that the mortgage payment fluctuates based on your interest rate. If rates have gone up, which they have today, you will see a small increase on your monthly mortgage payment. You'll get a letter in the mail from your lender in the next 30 to 45 days indicating your new mortgage payments. And your payments will go up accordingly. If you have a home equity line of credit, also called a HELOC or a credit line on your home or home line on your home, you will see your minimum interest payment go up as well. And that will be by 0.25%. If you have a home equity line of credit balance, say of $150,000, and your payments have now gone up 0.25%, I mean, that will be quite a increase on your minimum monthly payment, wouldn't you say? Let's take a look here what that works out to. Increase of about $32 each month for a $150,000 balance on a line of credit. So again, does $32 a month add up to thousands of dollars in breaking your mortgage next year or the year after when rates come back down? Not for me. That's why I'm sticking variable. Gives me that flexibility and opportunity to take advantage of further rate decreases in the future when they do occur. In the past, we've seen rate increase cycles last on average 12 to 18 months. We are now approaching 12 months of rate increases, right? The Bank of Canada did start increasing rates about this time last year, so we're at month 12. All right. If you have any variable rate credit cards or an unsecured line of credit, also your minimum interest payment will go up as well. So a lot of my clients, what have they been doing? They've actually been trying to pay down their lines of credit, and some of them actually have been rolling them into a mortgage and locking that rate in. Again, as I mentioned earlier on my show, fixed rates have been coming down since October 2022, which indicates that the market is pricing in lower rates in the future. And with that, if you have a variable rate now, you can actually lock in at a lower rate, which is pretty great. If you have a variable rate mortgage in which your payment remains static, which means your payment is fixed, we will actually see your mortgage payments stay the same going into next term here, unless you've hit your trigger point. That's a whole different conversation. You can watch one of my previous videos on my YouTube, Facebook, Twitter page where I talk about what happens when you hit your trigger point. But providing you have not, your payment will remain the same. What's going to happen with your mortgage, though, is if you've had a 30-year amortization on your mortgage and you took that out, your payment's going to remain fixed, but your amortization is going to be changed. Could go up to 32, 33 years because of the extra interest now that you'll be paying. Some clients that did take a variable rate static payment mortgage during the low rates of 1% to 2%, they've hit their trigger points. And what's been happening there is the interest rate is so high compared to when they took the mortgage that there's not enough payment going towards the entire interest payment now. So the interest payment actually is higher than their mortgage payment. Some banks, what they're doing is they're adding that extra interest back onto the mortgage balance. If you find yourself in that situation, you want to stop that, please give me a call. My contact information is below in the video description. You'll also see an appointment booking link where you can book an appointment straight into my calendar where we can talk about your mortgage and get you set up that way. All right. But yeah, if rates are if your payment is static, your amortization will change. If you have a fixed rate mortgage, no change for you, you're safe. This will not affect. If you have a pre-approval, you will not be affected by this rate increase because the pre-approval was set before the rates increased. What's going to happen to the housing market? What are real estate agents going to find happens to their business going into the next month? Well, we can see some slowdown perhaps in the next few weeks as everyone digests this new rate hike that has just been put into place today of 25 basis points. In case you're just tuning in now, rates have gone up by 25 basis points today, and it's expected that this may be the last rate hike for a while. We'll have to see. Mortgage Dashboard is reporting that in 9 months, the rate hike chance is 0%. So even a very notable mortgage website that Canadians use nationally is predicting a cessation of mortgage rate increases by the Bank of Canada. When's the next Bank of Canada announcement? It's on March 8th, 2023. We'll have another announcement then where the Bank of Canada does decide whether or not they will continue to increase rates going forward. What do you guys think? Do you think that March 8th we'll see another rate increase? Do you guys think that inflation will continue to go down ever so slowly? And again, that's not to be confused with inflation stopping. Prices are still going up. It's the rate in which prices are going up that has slowed down just slightly. I've had a few people ask me, Joe, when are prices coming back down for goods and services? You know, food prices, all that stuff. A lot of news outlets are reporting that prices will not ever come back down from where they are at now. They're sort of where they are. It's the increasing in prices that will stop. And once they increase, say if our lettuce and eggs, say eggs right now are expensive, right? A big pack of eggs I've seen cost $6 to $8, some $9. If we see those eggs remain at $6 going into next year, that means there's been no more inflation. But if you're expecting those eggs to go back from $6 back to $2 where they were before COVID, that's called deflation, and that probably will not happen. So if you're thinking that the prices remaining high means that inflation is high, that's not the way it works. Is that $6 turning into $6.25? Is that $6.25 turning into $6.50 and then $6.75? That is what's happening right now. That's why Bank of Canada has been increasing interest rates. All right, so thanks for joining me today. Bank of Canada does increase rates by 25 basis points. The next rate announcement is on March 8th, 2023. Join me tomorrow on my regularly scheduled time at Thursday at 11:30. Well, I'll make some more commentary about the Bank of Canada interest rate increase, as well as common industry news. We'll be talking about the inflation rate in more detail, average national house price, as well as fixed rates. And we'll be joining you tomorrow on Canadian Mortgage Weekly, episode 120 on Thursday, January 26th at 11:30 a.m. For now, love to hear if there's any questions in the chat here. Okay, why rates has been going up by the Canadian dollars weak? Well, that's a great question. The Canadian dollar is weak simply because the Canadian government wants the Canadian dollar to be weak. We want the Canadian dollar to be weak so other countries can spend their money to buy Canadian goods and services. And when $1 US dollar can buy more than $1 Canadian dollar of goods and services, we can see that other countries will buy more of Canada's goods and services. if the dollar is strong, then that's actually a bad thing for exports. So the government's making sure that is keeping in place. Yes, I do hope it starts decreasing soon. I do hope that rates are going to start decreasing, myself included, in a variable rate mortgage. I totally believe that rates are going to start decreasing towards the end of 2023, 2024. And if you're in a variable rate mortgage, you'll see that you'll be able to take advantage of those rate decreases as they come in. Anyway, thanks for watching, everyone, for today's episode. Join me tomorrow on my regular scheduled time. If you have any more questions, please leave them below. I only have so much time, and we'll talk to you tomorrow.